I think it is, as long as the ECB has negative interest rates, going to be fantastic for continental Europe. We look at the 5-year swap around 0, shocking. UK around 1. So that may change depending on how the vote goes. But there is still a very simple mathematical question for the banks. Do I hand out money to a sensible project at a very low margin, or do I send it to Mr. Draghi overnight and book a guaranteed instantaneous loss, which is an absolutely, for any trained economist in the room, an incomprehensible situation that you give it to a central bank and they would give you, with a smile, next morning back less than you gave them. But as long as we live in this world where interest rates are set by politics rather than by economics, I think there will be a strong ability to finance a variety of projects until we come to a point, and I think this is where we're heading to, where some banks will say this is unsustainable, we'll merge and we'll see a reorganization of the banking landscape. Well, that is part what changes the banking landscape. Regulation and negative interest rates are so huge a problem for many of them that we'll have all these alternative investment funds. And putting out bonds is a very interesting thing, but you need a critical mass because to sell those bonds, rate them and everything else is actually quite an expensive product. And then you need to have some longevity. I think Mitsubishi Estates just in Japan issued a 40-year bond, a placement of 80 basis points for 40 years, absolutely incredible. In UK happening a lot, in Germany a little bit less because the capital markets here are somewhat less developed, and the beauty of a bond, if you invest in it from an investor perspective, that it is listed somewhere and it is somehow tradable. If you can achieve that, a lot of it will happen, but there the German capital market, because of the strong banking landscape, is less developed.